as new and more reasonably priced alternatives that offer virtually identical technology and production quality emerge. Tesla's status as the best-selling electric vehicle manufacturer in the U.S. is beginning to shift, however, given the heightened competition and Tesla stock price difficulties. A number of reasons could propel the company to surpass 570 in the upcoming years. Welcome back to All That Tesla Stock, everyone. Additionally, the Fed may decide to halt interest rate increases. Given the high level of market expectations, officials are probably going to raise interest rates again at this time, perhaps by 0.5 percentage points or by 50 basis points. Christopher Waller, the governor of the Federal Reserve, recently stated that, provided the economic data cooperates, he is amenable to lowering the magnitude of interest rate hikes in the near future. He claims that the data from the last few weeks has given him greater confidence and encouraged him to think about reducing his rate at the December meeting of the Federal Open Market Committee, which sets interest rates by 50 basis points. Waller said that until he receives other information, such as the next PCE inflation report and the next jobs report, he would not be forming any opinions regarding the impending hike. Lael Brainerd, the vice chair of the Federal Reserve, also expressed her optimism about the recent U.S. inflation report, which indicated fewer price increases, and predicted that the Fed will soon scale down its interest rate hikes. Brainerd also indicated that the inflation data has been a good indicator, and that it will probably soon be time to move to a slower pace of rate rises. Could this be a sign that Tesla is gaining traction? To discover out, keep watching, and remember to subscribe and hit the notification bell to be informed about all things Tesla. During Tesla's Q3 results call, Elon Musk stated that the business is probably going to carry out a sizable repurchase next year, perhaps costing between $5 and $10 billion. He did, however, emphasize that the board of Tesla will eventually make this decision. It's possible that Tesla is waiting for board members to approve the buyback, but it's also possible that the company is waiting for the world economy to improve. Stock prices frequently plummet during a recession, causing markets to become unstable and share prices to fluctuate wildly. A flight to safety may lead some investors to withdraw their funds from the stock market as a result of this volatility, which forces them to respond swiftly to any indication of news, whether favorable or unfavorable. Tesla might be in a far stronger position to carry out a buyback in the case of such deteriorating market conditions, despite the difficult environment. Analysts like Ron Barron and Cathie Wood have demonstrated that Tesla might be well-positioned to succeed. Long-term bull market for Tesla following the steep decline in Tesla's stock price due to the company's second quarter delivery results. Cathie Wood recently purchased shares of the business. 150,000 to 113 shares of Tesla were bought by funds managed by Wood's ARK Investment Management, the company's first Tesla buy since mid-June. Days after the automaker lost its stake in ARK's principal fund, which it had owned for around 4.5 years, ARK Invest purchased Tesla shares. Cathie Wood viewed the current low stock price of Tesla as a huge buying opportunity, as seen by the most recent acquisitions made by ARK Invest and its CEO. Cathie Wood and her ARK team said in October that if Tesla had a product that it could sell for half the price of its current models, it could tenfold increase its entire addressable market. During Tesla's Q3 earnings call, Musk disclosed that the business is working on an electric car that will cost around half as much as the Model 3 and Model Y. Additionally, according to Cathie Wood, Tesla represents a remedy for the present economic crisis. She claims that innovation will help address the energy crises and supply chain problems, and that consumer enthusiasm for EVs like Tesla is only increasing. Wood thinks that in the future, Tesla stock will be too costly to purchase. Barron Capital's Ron Barron has also voiced a similar opinion, having initially purchased stock in Tesla in 2014. Ron Barron has been a long-time supporter of the firm. The entrepreneur has a total investment in Tesla of almost $4 billion between his personal assets and those of his clients at Barron Capital. Barron recently stated to CNBC that he anticipates Tesla to generate significant profits that will ultimately propel the business to a valuation of approximately $4.5 trillion. Barron thinks Tesla stock will rise by almost 570% in the future. He asserts that Tesla might make about $1 trillion in sales if it manufactures 20 million cars annually by 2030 and sells them for about $50,000 each. Furthermore, a 15 times multiple on the approximately $300 billion in operating profits would eventually result in a $4.5 trillion valuation if the corporation achieves operating margins of about 30%. Tesla, which is presently worth roughly $560 billion, would require a jump of more than 570% from current prices to reach Barron's aim. Barron's optimistic assessment is predicated only on the assumption that Tesla will grow its automotive business over the next 10 years and sell about 20 million cars annually. Tesla is expected to sell slightly over 1 million EVs this year, and Musk has previously indicated that the business intends to create 20 million EVs by 2030. Elon Musk is so confident about Tesla's future that he thinks the electric vehicle manufacturer has what it takes to become the most valuable corporation in the world. In the past, Musk expressed his belief that Tesla might surpass Apple in value. Apple was worth about $700 billion at the time, which was less than the current market capitalization of Tesla. Since then, Musk has changed his assessment, stating that he now thinks Tesla might be worth more than the combined values of Apple and Saudi Aramco. According to this assertion, Tesla is worth around $4.5 trillion, which means that its market capitalization would have to increase from the present $566 billion to $4.5 trillion. Musk thinks it's plausible, but he adds this doesn't guarantee it will happen anytime soon. If Tesla can raise its worth to $4.5 trillion, it will eventually overtake Apple, which is currently valued at $2.5 trillion. Ron Barron concurs with Musk's assertion that Tesla has the potential to surpass both Apple and Saudi Aramco in size. Barron stresses that his bullish thesis for Tesla's value is based only on vehicle revenue and excludes other parts of the company's operations like robotics, FSD technology, and batteries. His investment has a little margin of safety because of this. Ron Barron went on to say that there is a lot more upside to be expected from Tesla because Musk thinks robots will be larger than cars. Musk has stated this year that the company's humanoid robot will eventually be its most valuable asset. The importance of the robot will become evident in the upcoming years, according to Tesla officials on the Q1 earnings call. Musk continued by saying that people who are observant and attentive will see that the humanoid robot will ultimately be more valuable than both the automotive industry and fully autonomous driving, taking over hazardous, monotonous, and repetitive activities. The Tesla robot is made to be amiable and navigate around a human-populated environment. As a staunch admirer of Tesla CEO Elon Musk, Ron Barron has stated that he is not worried that Musk's Twitter investment will become a distraction. He thinks that Musk's investment in Twitter is increasing his overall power, and that the CEO of both Tesla and Twitter will keep concentrating on creating meaningful things. Barron has the same level of optimism about Musk's other business, SpaceX, as he does about Tesla. Barron disclosed in a previous interview with CNBC that he has been investing in healthcare and travel businesses lately. Additionally, he said that he has increased his investment in SpaceX by an additional $100 million. According to Barron, the value of Tesla shares is expected to be between $500 and $600 in 2025 and $4.5 trillion in 8 to 10 years. Would Tesla be able to afford this? Please share your thoughts about Tesla in the comments section below.